Palantir, it is absolutely pumping right now. Overnight, it's up 24%. Like, look at that candle. That is a monstrous candle. Right? So I think we're making probably a little bit too much money here. So let's have a chat about it. Uh, Palantir was, for the majority of this time here, was my largest position. So 2024 to 2025, it was my largest position in my portfolio. The only thing that took over that was this year, over the last few months or so, was micro strategy. So I do think micro strategy potentially has what it takes. Well, that was my thinking at this. It might turn out to be wrong now, all right, but it might have what it takes to outperform Palantir. So whenever you're constructing a portfolio, right, you got to construct it based on your conviction levels. So as you can see, Palantir was 7.68% of my portfolio. Last year, it was the number one position. And then MicroStrategy broke out. I thought it's going to move harder than Palantir. So far, it hasn't. But let's see what happens into the rest of the year. I could be wrong on that. Now, what did I want to talk about was my execution with Palantir. So my execution actually was pretty damn dead on. Right now, it's kind of turning into one of those hot stocks right now. It's all over the news. It's kind of turning into Nvidia. But the hardest thing with this game is you can't chase the hype. Like right at the start of this video, what was I saying? We're making a little bit too much money, right? Like at the beginning of today, I saw the move. We're up 25%, right? I could not predict that we would get a move like that. I couldn't. Okay. So I was getting all these messages today. Wow, Dylan, you're a genius. Wow, you made me so much money by me copying you on eToro, all of that stuff. You know, it pumps me up. It does. It gets my ego going. It does. But right now, I'm back to baseline. It's like it didn't really happen. And now, why do I need to get my emotions back to baseline? It's because if I get too happy, if I allow this thing to make me happy for days and days and days upon end, right? One, I'm going to lose motivation to actually get some work done. One, I'm going to think it's too, and another thing is I'm going to think everything's just too easy, right? I'm going to actually start fooling myself that I'm actually a genius. I couldn't predict this stuff. I did think it was going to be one of the best stocks. That's why I was second in the portfolio, first for all of last year. But I couldn't predict a big move like this overnight, right? I couldn't predict we would be up 320%, right? I thought it would. I had odds that it's probably going to be one of the best performers. Luckily, that came true. Um, but yeah, right now you got to get your emotions back to baseline because when you're way too happy with this investing stuff, you're gonna make silly mistakes. Also, works vice versa. If you're way too sad, you're gonna make silly mistakes as well. So get yourself to baseline so you can do the proper thinking. Now, before we jump into it, I do just want to show you the portfolio, right? So Palantir is 7.68%, second largest. Above that, when I placed this investment, I did think MicroStrategy would outperform Palantir. So far, that's not correct, right? It's going well overall, but that's a recent addition, MicroStrategy, and we'll talk more about that later. But this is how I'm not a genius. Like my third position, Louis Vuitton, it's negative, right? I put it as number three because that's my third highest conviction investment. It didn't work. So that's why I can't get so hyped up about all of this stuff because I'm not that smart. All of this stuff, honestly, it's all a game of probabilities. You can't get it all right. And hey, like, look down here. I got Meta down here. Meta, it's my lowest position, 0.51%. It's up 403%, man. It's up 403%. What is wrong with me? It's the biggest one. It's up the most, right? And it's my smallest conviction investment. And obviously, there is Meta in many of the other things, all the indices that I have, Meta is in all of them, the NASDAQ, the S&P 500 and all of that. But still, right, it's not that big. Same with Nvidia. Nvidia is up 357%. It was only 1.83% allocation. So like I've done extremely well over the last year or so. Well, over the last 5 years, up 201%. It's doing very well. But it has not been perfect. There has been things where, I should have really gone harder on Nvidia near the lows. You can say the same with Meta and many, many other things. But what I actually did get pretty damn spot on is Palantir. The execution with Palantir was quite perfect, if I can say so myself. So if we look at Palantir, here are my buys. Overall, the average is up 320%. But you can see here on the right, some of these first ones here up 644%. Invested at 27th of May, 2023. And this was like pretty much the perfect buy. As you will see, like as I explain all of this, it's all based on my strategy. I followed the strategy 100%, quite perfectly. That's why I'm actually proud of this. All right. But overall, have I got all of the investments right, the timing right with all this stuff in the portfolio? No way. No way. I still have a lot of room for improvement. Um, so yeah, that big one, 644%. Got a few here, 401, three positions, 401 here, 372, and then 403. They're all roughly around the same mark. And then three more investments at 232, 232, 232. So when you weigh that out, it is 320% gain with 7.68% invested. So if we go to that first one, 27th of May, 2023, I just want to walk you through what I was thinking with all of this stuff. So Palantir was one of the most hyped stocks during COVID, big IPO move. But usually what happens to IPOs, most IPOs, they're going to fizzle out and go down. Like they get that pump. Why? Because all of the retail investors think it's day one, but it's not. These stocks, a lot of them, they're more than 10 years old. So the people that have shares, they've been waiting for a liquidity event. And so when are they going to sell? Usually they're on vesting periods of like 6 months or so, 6 months, 12 months, and they can't sell right straight away at the IPO. So that's kind of what creates that distribution. People buy into the hype thinking they're new, but then the insiders are going to start selling. They've got big, big money. They're actually really, really rich now, which creates the distribution top and it starts to fall. Now, my whole thing with this was I was really starting to think like, what is the play? What is the narrative going to be? And it's going to be AI. Like on my eToro, you can go scroll down through some of the articles. I've got it calling like, hey, I think everything's in a bull market. It was crazy when I did those posts. No one was looking at them. I think AI is, going to be the next bubble. I've got articles on this stuff. You can go back and check them. So I'm creating this thesis. I'm seeing that, I'm trying to research which AI stocks, Palantir, Nvidia, those are the ones that are coming to mind, Amazon, robotics based ones as well. But definitely Palantir and Nvidia. So I then start to notice it's in a downtrend and it's going and going and going. I've got knowledge that if it is fundamentally a great stock, it should only go down for like 1 or 2 years. Unless the environment is really, really, really bad, it should only go down for 1 or 2 years. Now, I can't tell you when it's going to go down and when it's going to start going down and how long for. All I know is, hey, it's already been down for 6 months. That's quite a long period of time. So if it goes for, another year, that's even longer. So it should be roughly getting close to that 2-year mark where things start to reverse. So what do I simply do with technical analysis? This is going to look really, really simple. But all I did was draw a line like that. I just drew a downtrending line that just connected these dots. And then based on my strategy, I wait for some sort of accumulation at the lows. You can see this is an accumulation. It's going sideways for quite some time at the lows below the IPO price. This is a distribution and this is the downtrend. Overall, in the macro, this whole thing is a downtrend though. And then I want to see a big breakout and it closes 2 weeks above the breakout. So we've got the downtrending red line, one big breakout, right? 2 big breakouts, and that is confirmation. I'd rather be a couple weeks late, but know that have conviction that the market is now on my side. And then as I get more and more and more evidence that the market is on my side, I will continue to invest higher and higher and higher. I've spoken about in the past. If you were 3 years late to some of the best stocks, think about Amazon. If you're 3 years late to Amazon, you still made a lot of money. you still got pretty damn rich. You can go like with any stock, if it has been a true compounder, you can be 3 years late. So what is 2 weeks, right? What is 1 year late? It's not that big in the grand scheme of things. So like before, when I was really getting into this stuff right at the beginning, I felt like I had to catch every move and all of that stuff. But like, no, I need to try to capture the monstrous macro of the decade. That's what I'm trying to do and get as close to that as possible. So I look for those 2 weeks, right? There it is. And then the thing that gave me extra confidence was not only there's a lot of volume in here, like there's a lot of strength in these candles. They're not little tiny green candles, they're big candles, right? Shows a lot of excitement that something is different now. But it's also in terms of psychology, it's about the whole number of 10, right? The big round number of 10, that is through here. So we smashed through that like it was nothing. Okay. We smashed through that like it was nothing. So yeah, that's where the first buy was. 27th of May at around $13. Okay. Now the price is at 105. So then in this moment, I've placed the first investment. I now need to think, where are my other positions? How I'm going to average up, right? I'm going to average up into it as I get more and more and more confirmed. So I want to think, where is the all-time high with this stock? Whoops, what did I do here? Where is the all-time high with this stock? Most people would say, whoops, geez, what am I doing today? Most people would say this is the all-time high, but often the volatility into the IPO or near the top of charts, you kind of usually ignore them and you look for the line of next best fit. So you're looking for multiple touches. So the line with multiple touches, I would say, is around $29 here, right? And I just like to be a little bit conservative and just go up a little bit to like 30, right? There we go. So we're at the whole number of 30, and I'm going to ignore this like it doesn't even exist. So now I've got two keys that I'm looking at. I'm looking at a break of 30, which I want to be a buyer at all-time high. Why? Said it many, many times before, but when you buy at all-time high after a prolonged period of time like this, multiple years, it's often one of the best times to buy because everybody in the history of that asset is now in a game. When everybody in the history of the asset is in a game, what are they? They're extremely happy. Let's draw that smiley face like we always do. So if people are happy, what are they likely to do? They're going to keep on buying. When more buyers come in, it is supply versus demand. Price goes up. So it's actually really safe to buy at the highs, but when that actually does happen, often there's news articles saying, oh, it's scary, doomsday, the stock market's gone up too much. Stock market likes to run for many years. You know how I was saying, like, it likes to go down for 1 to 2 years? The market likes to trend for longer than that, right? For longer than that. So the two key places were that first 2 week breakout and then the all-time high. That's where I want to be a buyer. I want to be a buyer at those two places. So one is around the $10 mark, but I got it at 13. I wanted to get above 10, got it at 13. That's fine. Rather be a little bit late, wait for the closes of those weekly candles. And I want to be a buyer above 31. And kind of like, where is the midpoint of that? Where would I be happy to buy? It's around the break of 20. All right. Or anything above 20, I would want to be a buyer. So I actually like buying above those numbers, above 20, above 30, above 10. Get what I mean? Because there's often the market finds resistance at those whole numbers. So buy here, buy at the break of 10, do that, buy at the break of 20 and buy at the break of 30, and then I don't touch it, right? And that will give me the average price around that $20 mark right in the middle there, okay? And then, like saying, if I am a few years late to the bottom, that's fine. I don't have to get the bottom. I don't know how to pick the bottom, right? I've tried buying the bottoms in the past, and then the bottom just went even lower, and it wasn't the bottom. And I get stuck in these downtrends for multiple years, and I get opportunity costed to the gills. Not only do I get opportunity costed to the gills, because if I draw it, who knows? If I could just dollar costed this whole thing all the way down. I'm not that smart when it comes to valuations to know where the bottom is. I don't know. and I don't have the massive capital where I can actually create the bottom myself, right? I'm not trading a fund of multiple billions of dollars and no, hey, I got a idea that this in terms of the valuation is at the low and I'm going to set the bottom myself. I don't know that, right? I don't know that. So I got to play to the moves going higher and the trend and change. I'd rather chase the trend going up and be a bit early. Now, what I forgot to mention is by creating these three buys, honestly, I'm always happy to buy at all-time high. If I fundamentally like the stock, I am happy that my average buy price is at all-time high. Sometimes if I've missed it, I just go all in, put my whole allocation that I want at all-time high. I'm very confident with that. Sometimes it's a bit scary because you get the initial thrust and you get the pullback and then you go again. I still think a pullback is possible. But what have I done with these three buys? Boom, boom, boom. The average is in the middle, which means when it does break out to all-time high, it's probably I'm never going to be in a loss ever, unless there's something fundamentally wrong with the stock. Like, honestly, now with where the price of the stock is, I'd say it's very, very low odds that we ever revisit these prices around $20 ever again. Like, I don't think it's going to happen. Like, if the price is $100 right now, that's an 80% crash. That's not going to happen. Buyers are going to come in. Buyers love coming in at 50% pullbacks. So that's going to be a support. So $50 is going to be a big support level. But yeah, I don't think it's going to 20 ever again. It's gone. This thing is gone. But what I do want to be thinking about is whenever the market does make these big bases, breaks out to all-time high, and it's been multiple years, I just like to measure it from high to low, boom, here. And I like to move that up, a measured move. And at this level, from 80% of it to the level, so if we call the top 100%, a lot of people are going to be wanting to take profit at 100%. What I've learned is like sometimes you want to take profit. If you're more of a short-term guy, you're not really. I'm in this for the long term for me. I'm in this for a decade, so I'm not going to take any profits. But if you're doing this more of a shorter term trade sort of thing, I would be looking to take profits now because this is roughly around 80% move, right? You actually want to you don't want to wait for your full thing and get greedy. You want to start taking profits up in here, okay? So that's why I'm saying, hey, we're making probably a little bit too much money because we're getting close to the target now. We're getting really close to the target. And it's just it's technical analysis stuff, like just how it works. I bet you there's probably going to be a pullback of some sort from now to here, like in this gap roughly. I bet you there's a pullback of some sort. Let's wait and see. So we may as well just leave that. If we go back and have a look at everything, so yeah, that first, where were the buys? So the 13, which is the break of 10, above 20, 20.68, 20.68, and then here's some at above the break of 31. So we had those three key buys, the three key buys. Yeah, that's been my mindset with Palantir. Honestly, it's very hard to do this across the whole entire stock market, but this is the first time like, wow, Dylan, one of the first times like the execution was pretty much dead on. And now my emotions, I'm not chasing this, man. My buys aren't up here. My buys are down at $20. I think it's fine to be a buyer up here, but not trying to get rich short term, like dollar cost in for a decade. Like I'm a believer that if we look a decade out, it's probably going to be like something like that. Okay. Keeps on going up, zigzagging. Maybe not that steep. It could be less steep. Who knows? But I think it's a great investment. I think these investments can surprise us with AI and all of that. Uh, I think we actually can't base this stuff off of history because I don't know if there has been something as groundbreaking as AI before. So this stuff may shock us. So I do think it's also a great insurance play. It's a great hedge against our lives. Like you got to have AI in your portfolio. I wouldn't put your whole net worth in AI. I would be really thinking about portfolio theory and having diversification. But AI has to Has to. AI technology, it has to be in your portfolio. And I personally believe it has to be quite a significant chunk, 25%. But of these good AI companies, like I wouldn't be going with like some little small startups. Like if you got 25% of small little AI startups, they're probably most of them all going to get swallowed up and die. Um, some of them could get acquired or whatever. Some could actually turn into big winners, but you're kind of playing a different game at that stage. Like I'd rather just bet on these big ones, because these big ones they still have the ability to move a lot. Like everyone's quite quiet at the moment. No one's really talking about the magnificent seven. The Googles, the Amazons, the Fang. That's what they used to call them. No one's really talking about that stuff. It's still the major winner, man. It still is the major winner. And I believe it will just keep on winning. They will just keep on winning. So right now it's a really great time for the stock market. Donald Trump, all of that. The economy is actually looking decent. I think, with the leadership of Donald Trump and all of that, I think we're set up for a good few years. So hopefully it turns out that way. And so far, the market is really, really, really enjoying it. I've got another quick lesson for you. So, I was talking, hey, I'm not really a genius because look at my conviction levels. All of your investments, they have to be based on conviction and there has to be some sort of theory behind it. Like, I thought Louis Vuitton was going to be, I'm very confident to put Louis Vuitton at a really high level of 7%. Why? It was because if you look at my portfolio, it's all tech, man. It's all tech. I wanted to have something that I really believed in, which was more diversification. So obviously luxury goods, fashion, all of that stuff. So it kind of balances the portfolio in that way, which gives me the conviction. But I can't just say, hey, my excuse was I am down 10%. Oh, it's because of diversification. I wanted to diversify in luxury goods. I thought it was going to make money. I could have gone into something else. Like I'm pretty sure Hermes is pumping right now. Hermes is actually up on the position. Louis is down, so maybe it would have been a better move to go heavy on Hermes and low on Louis, right? So that's what I'm thinking. Even like the same thing. I got hedging. I'm hedging with China, 10 cents, Baba. But maybe I hedged too much. Maybe these positions are too big. Like the percentage gain on them is actually quite small. So it's like I'm showing again how I'm not actually 100% correct. Um, but everything changes in the moment. Like when I place the micro strategy investment, um, so I've got a couple early ones. Like here's like March 2024. So that position's up 173%. But when I really started moving big into it to make it that big position, was like at the back end of last year. So 31st of October 2024, that's when I went in hard with these two positions of 2.6 and 2.6%. Um, and that's only up 40%, right? Um, and what is MicroStrategy? MicroStrategy is a Bitcoin play. I got a Bitcoin play here too, which is literally just Bitcoin, but it's less percentage size. Why? Because I believe that based on today, MicroStrategy should, if I'm correct, it is my theory that MicroStrategy should actually outperform Bitcoin because I feel like it's a leveraged version of Bitcoin itself. It's a company that produces a cash flow which can keep on accumulating more and more and more Bitcoin, where Bitcoin is just Bitcoin. So imagine this. Imagine you've got a company that has revenue, has profits, and then can buy more Bitcoin. Imagine it already has $1 million of Bitcoin, and then it's accumulating more Bitcoin. Where another thing is like an index fund, it just has 1 million Bitcoins in there. It can't get more Bitcoins. Yeah, the dollar value can go up, but so can it in the first example of the company. The company can actually accumulate more, and it can do debt deals with banks and stuff like this. So that's kind of how it's a leveraged, in a way, potentially better version. You do have like key man risk, like if Michael Saylor messes it up, we're in a world for hurt where you don't have that risk with Bitcoin because like, no one's really controlling Bitcoin. Um, but yeah, that's kind of like how I look at it. And then if I have put in more into MicroStrategy 7.96, Bitcoin is down here 2.5. Means if you just look at those two, that's like a 10% weighting to Bitcoin. And if we go check out what has actually been happening with the breakouts with Bitcoin, the market is currently up around 30%. with the breakout of MicroStrategy, it's up like 94%. So like overall, you could go back in any point in time. MicroStrategy is actually making bigger moves. So like, let's just say if right now the market is consolidating here, like these are highly, highly correlated. They're practically the same charts, but I believe MicroStrategy will keep on moving more than the other one. So you can see consolidation here, MicroStrategy, consolidation here. If it does break out, and I hope it does go higher because I own some. If it goes up like this, and then Bitcoin does the same, like it's actually going to be like Bitcoin has to move up and MicroStrategy will follow. If this moves up, I believe the move should hopefully be bigger on MicroStrategy. If not, then that again is an example of how I am not 100% correct when it comes to my allocations and my thinking. Okay. So that's a little bit inside of how I think, how you should think as an investor. Everything's based on conviction. You gotta be really, really honest with yourself. Look, I'm honest about my Louis Vuitton. Negative. It's a high conviction move for me. All right. So yeah, that's a little bit of insight. If you got any questions, you know what to do. Hopefully you found this video valuable, and I'll see you in the next video.